Hey everyone, welcome back to the channel, your number one source for income-oriented investing. By the way, I got my new lights. Let me know how do you feel about the lighting. Obviously, you could see my ugly face now, a lot more clear, but let me know if the lighting looks better than the previous videos, if it's too bright, if it's too soft, etc. Same thing for my audio. I saw a few comments that my audio is low. I jacked up the gain a lot on my microphone, so I don't know what's going on. Let me know how the audio is as well. Anyway, today's video, we're going to talk about a topic that I don't like discussing. It's very boring for me, but it's very important for Canadians to understand that dreadful, confusing 15% withholding tax. So hopefully by the end of the video, you will understand everything about this stupid tax and you'll be able to manage your investments accordingly. So first of all, let's start with it's actually a 30% withholding tax, but because of a tax treaty between Canada and the US, at the time I'm filming this, I don't know if it's gonna hold up for the future, but I don't think that's gonna change. It's actually 30%, but because of a tax treaty, it's 15%. That's the first thing that most people don't even know. Now, let's go through the 15% tax implications on US listed ETFs. I repeat, US listed stocks and ETFs. So ETFs and stocks that are listed on the New York Stock Exchange, on the NASDAQ, right? Things like YMAX, MSTY from YieldMax, Tesla stock, Procter & Gamble stock, whatever it is, US listed, not Canadian listed, all right? So first of all, you have to remember that on any stock or ETF that's US listed, that has income, that has some sort of dividend, whatever it is, a dividend distribution, if it's a TLT, right? TLT is bonds, it gives an income. Anything that has income, any income from US listed funds, there will be a 15% withholding tax. Okay, so whether it's a dividend stock, bond ETF, covered call ETF, if it's listed in the US, there will be a 15% withholding tax, except for the RRSP and Lira account. So if you have a US listed fund that gives out income, a cash account, a TFSA account, first home savings plan, the education plan, everything except the RRSP, RIF, Lira, and LIF, they will be subject to the 15% withholding tax. Now, the reason why the RRSP, the RIF, the LIF, and the Lira are excluded is because they're technically retirement accounts, and because of a tax treaty, another tax treaty, I would say, there's no 15% withholding tax if you hold US listed funds that give out an income, whatever the income is, in those accounts because they're deemed retirement accounts. The TFSA is subject to the 15% cash account, home savings plan account, whatever it is, first home savings account, because those are not deemed retirement account. So that's very, very important. So this is why I always say, if you like any US listed funds that give income, you should have them in your RSP or Lira, or RIF or LIF, because there's literally no 15% withholding tax. Okay. So it applies to, again, very important point. It applies to all accounts except the RSP, RIF, Lira, and LIF. Okay. Now in the cash account, you can get a little portion of that back via the foreign income tax credit, but after conferring with my accountant, you don't get much of it back. You could get a little bit of it back from what I've heard. Don't quote me on this. You could get a little bit of it back. In the TFSA, it's gone. You can't get any of it back as far as I know, which is why I always tell people, which is why I came out with that video, do not hold Misty, the YieldMax Misty, in a TFSA or in a cash account as well. Get the Canadian listed equivalent because there won't be any 15% withholding tax. You're just handicapping yourself 15% right off the bat. If you absolutely love YieldMax and Misty and that stuff, hold those in the RSP or Lira. There is no 15% withholding tax. So this is the general information that you need to know for US listed funds. So in summary, if you have a US listed stock or ETF that gives out any sort of income, whether it's a dividend stock, whether it's a TLT ETF, a YieldMax ETF, covered call ETF, you will be subject to a 15% withholding tax no matter what. The only exception is the RSP, RIF, Lira, and LIF. It's the only exception. They don't have the 15% withholding tax at all. In the cash account, you could get a little bit of it back, but I personally would not recommend holding anything that has yield, anything that has an income or dividend or whatever, or distribution, US listed in a TFSA or a cash account or the first home saving account. If you really love a US listed fund, hold those that gives out income, hold those in RSP or Lira, RIF or LIF. I say gives out income because if you have an Amazon or a Tesla or something that has no dividend, that's completely fine because the 15% tax is only on income being generated by the stock or ETF. So if you have Tesla in the TFSA, that's fine. It's still tax-free. Capital gains are tax-free even on US listed, right? So if you buy Tesla at one price, sell it at a higher price, the capital gain is tax-free. There's no 15% withholding tax. That's only on the income. Now, that wraps up US listed funds and ETFs. What about Canadian listed ETFs? This is a very common question I get. This is where there's a lot of confusion. Canadian listed ETF that holds US assets inside, either US stocks, US fixed income, US covered call, right? If they do covered calls on the S&P 500, right? Things like USCL or USCC, QQCL, QQCC. These are Canadian listed, right? They're listed on the Canadian stock market, but they hold US stuff. HHIS, listed in Canada, they hold exclusively US stuff. How does that work? Well, if there is US dividend income being generated, or foreign income or regular income, things like bonds, right? Things like TLT. For example, like H bond from Hamilton that holds US bond stuff. If there is an income sourced in the US, the Canadian ETF will have to pay some sort of withholding tax usually, but it's all transparent. It's managed within the fund. I'll show you later some examples of where you need to go look to find out how much foreign income tax, withholding tax, if you will, the Canadian ETF is paying. We'll look at a bunch of examples later. So typically, you have to remember that the Canadian ETF will have to pay some withholding taxes, but this is only on dividend income and regular income. You have to remember that in Canada, covered call income or option premium income is classified as capital gains. So it's excluded. So the fund managers that are writing covered calls, the Canadian fund managers or the Canadian ETFs that are writing covered calls on US stuff, that's capital gains. There's no 15% withholding tax on that because that's capital gains. The 15% withholding tax is only on US dividends and US regular income like bonds. More on that in a second later. So a very important point. You're a covered call investor like me. You hold USCL and QQCL and HHIS. Pretty much all the income is the covered call option premiums. Although it's in the US, they're US stocks. There is no 15% withholding tax. I repeat, there is no 15% withholding tax. The ETF is not paying it either because in Canada, covered call or option premium income is capital gains. It's not dividend income. Okay, very, very, very important. I already mentioned this. Another important point: it's transparent to you. You're not going to transparent to you if you hold a Canadian listed ETF. It's completely transparent. You'll see that. I'll show you where to find it. And if you hold it does apply in the RRSP or Lira. So if you have a Canadian income-oriented ETF, for example, like we'll see in a second, if you hold them in the RSP, you're not exempt because it's the ETF paying it. So if the ETF is actually paying some withholding taxes, which we'll see in a second where you could find it, and you have that in the RSP, you're kind of paying it by proxy because it's paid by the ETF. Okay, so I think this is where that whole VOO versus VFV discussion and whatever topic, right? It is better, I think, to hold VOO in the RSP versus VFV, because VFV, there is a little bit of foreign income tax, I believe. Not only that, the fee's a little bit higher. So if you have USD currency, holding VU is more efficient than holding VFV in the RRSP specifically. Okay, but anyway, I'm going down a rabbit hole here. So how much withholding tax or is the Canadian ETF fund managers actually paying? Let's take a look. So you could find all the information as usual on the official fund manager's website. Let's go through a few examples. We'll look at some Hamilton, Harvest, and Global X, but you'll be able to find this information everywhere. So for HYLD, for example, or anything, any Hamilton ETF, if you go to distributions, you'll see tax information available here. You click on that and you will get the 2024 tax breakdown for each fund. Okay, so 2025 obviously is not out yet, but 2024 should give you an idea of 2025. But either way, this is where all the income, if an ETF has an income, you'll have the breakdown. And you're going to see a column called foreign tax withheld. So this column is telling you how much withholding tax that the Canadian ETF is paying. This is transparent to you, but you could still see it to the IRS. How much withholding taxes are they paying? And what you'll notice is that it's going to be in ETFs that have US dividend stocks or bonds inside, typically. Because like we said, covered call income is excluded. They're not paying withholding taxes on writing options. So EMAX, for example, and FMAX, they hold a lot of US dividend stocks, right? FMAX holds some US financials, EMAX holds US energy stocks. So H bond holds a lot of it holds a lot of TLT and bond stuff, right, in the US. So this is where you could see from a per share basis how much they pay. And you'll notice that it's actually pretty small, very, very small, because EMAX and FMAX, for example, most of the income is not coming from the dividends from the US dividend stocks inside, although it is a tiny, tiny bit. How much? Well, it's the foreign income portion here. Right? Most of the income is actually coming from covered call writing, which could only be capital gains and return of capital. So you see the majority of EMAX, the majority of FMAX, the majority is going to be capital gains and return of capital, of course. Of course, EMAX has a little bit of Canadian eligible dividends because there's a couple of Canadian oil and gas producers in there. So it makes sense. But here you could see that the foreign tax withheld on EMAX is 3.7 and something cents. For FMAX, it's 3 cents approximately. That's on $1.82 or $1.77. You see how it's very, very, very tiny. It's very, very, very small. H bond, for example, invests in TLT, and there's going to be some taxes there for sure. It's a little bit higher. It's 7.5 cents on $1.57. So typically you'll see it in bracket or you'll see it in negative, but foreign tax withheld, this is how much withholding tax the ETF is paying. This is completely net. It's included in the fund. It's fully transparent. Total returns is all net of all this stuff. Okay. Let's look at Harvest. Another example. HHIS, for example. I keep getting questions. Is HHIS is paying foreign withholding taxes, right? Well, let's check it out. Right at the top of the Harvest high income shares, guys, 2024 tax information. Can't get more easier than that. We open it up, and you'll see that there is actually a column called withholding tax. And for all of the shares, everything. So this is 2024. HHIS was not out yet, but only a couple of these high income shares were out. But you see for 2024, 2025, we'll get the information in about the March of 2026. But you could see that all of the income, there is no withholding tax on any of these. None, right? This is completely normal because, again, these doing covered calls is capital gains or ROC. So you see almost all the income here is either ROC or capital gains. And I expect this to continue in the future. If we look at the regular ETFs from Harvest, you click on distributions for any of the ETFs, you'll scroll down and you'll see a box called annual tax information. If you click on it and open it up, you have all the years here, but let's check out 2024, guys. Again, you'll see a column called withholding tax. This is how much withholding tax the ETF is paying, but you could see how small, very, very, very small amount it is, 2 cents. And while the total was 75 cents per share. This is all per share, right? This is HBF, the Harvest Brand Leaders, which includes some US dividend stocks. So by default, there's going to be a little bit of foreign income, which means, 12 cents out of the 75 cents was dividend income, which means they have to pay a little bit of withholding tax. But you see how small it is, right? How small it is here. HHL, for example, it was just 1 penny because the dividends are really low on the healthcare stocks, right? HGR, which are REITs, there's a lot of US and global REITs in there. So there is a lot of, there's quite a bit of foreign income, 19 cents out of 55. But again, the covered call income is only ROC and capital gains, which is why the majority covered call ETFs are always going to be ROC and capital gains. But you see a little bit of withholding tax that the fund manager paid or took care of. Of course, if you're dealing with Canadian stuff, there's never going to be any withholding tax because it's just Canadian dividend stock. So you could go down, you could look at HTA because HTA actually had 0 withholding tax because tech stocks typically don't have dividends, right? So it's only normal that it's going to have little or 0 withholding tax paid, right? If you go down to the fixed income ETFs, those are of course going to have withholding tax a little bit because most of the income, a lot of the income is foreign income, right? Bond income is considered regular regular foreign income. So you see that here, but again, they're still doing covered calls. So the majority is always going to be rocking capital gains, but there's going to be a portion that's a foreign income, which means they pay withholding taxes on that. And you'll see it here, but a lot lower than you probably thought, right? Like HPYT, Happy Tea, only 2 cents per share of withholding tax on $1.80. It's not a lot, guys. So you could scroll down. It's very, very transparent. You could see exactly how much withholding tax the Canadian ETF fund manager is paying transparently to the IRS. Let's go to Global X. Last example, guys. You click on our ETFs, scroll down, 2024 distribution summary. You open it up. Guess what? Once again, there's a column called foreign tax withheld. And here, this is where you could see how much of the withholding tax the Canadian fund manager is paying. So if we look at the S&P 500 and NASDAQ 100, it's a tiny, tiny, tiny bit. It's almost 2 cents of withholding tax because USSX, which is the S&P 500, does have some dividend stocks in there, does have a little bit of yield. The NASDAQ has almost nothing, but it does have a little bit. So you could see how 0.009 of withholding tax. You see how insignificant it could be. If we look at the some covered call stuff here, here's some bond stuff, right? SPay, MPay, LPay. Of course, these are hold US bond stuff, so they're going to have some income tax to pay, foreign income, withholding tax to pay, and of course the bigger, L pays the long duration, so they have 8 cents out of $2.10. It's still not a lot, right? If we look at QQCL, which is the NASDAQ here, you see that this one actually has 0. It has nothing. There was no withholding tax on that one. USCL, same thing, 0. So, the accounting teams could do certain tricks, I guess, to not have to pay any withholding taxes here. But this is a reminder for you income investors. Even though there's US stuff or exclusively US stuff in a Canadian listed ETF, it doesn't mean that there's going to be withholding tax because covered call income, even on US stuff in Canada, can only be capital gains and ROC. So where you will see it, a little bit of foreign tax withheld or withholding tax is on dividend stocks, US dividend stocks and bond stuff, foreign income, typically. Obviously, you won't see it on the Canadian stuff. So hopefully this video was informative for you. That is it for the 15% withholding tax. So in summary, everyone, if it's US listed, okay, if it's US listed, you're going to get hit with that 15% withholding tax in all accounts if there's any income on the stocks or ETFs. All accounts except the RRSP, RIF, LIRA, and LIF, those are exempt. In the cash account, you might get a little bit of it back with the foreign income tax credit. My personal opinion, my recommendation, you should not have US listed stocks, I repeat, US listed stocks and ETFs that have yield. You know, if you hold Tesla, Amazon, there's no dividend there, it's fine. But if something US listed has yield, you shouldn't hold it in a TFSA or cash account. Go for the Canadian equivalent. For the Canadian listed funds that have the US stuff, they do have to pay withholding taxes, but only if there's dividend stocks in there. It's only on dividend income and regular income. So stuff like bonds, like H bond, and like we saw. And last point is you could look for yourself the breakdown on how much withholding tax the Canadian ETF is paying, but it's all transparent to you. All right, so let me know, give me a thumbs up if you enjoy this. I know it's not exactly an enjoyable video, but hopefully you know everything there's to know now about the 15% withholding tax. And I get other tax questions that keep coming up as well. What's more tax efficient? Is it more tax efficient in this account versus that account? A lot of questions don't really make sense to me because, you know, what is this more tax efficient in a TFSA or in an RRSP? Well, they're both tax sheltered. But when it comes to the cash account, the non-registered account, you need to understand the tax efficiency. And I already have a video out on that. Make sure to check it out. It's an oldie, but it's a goodie. And I have a playlist, a specific playlist just for tax videos. So click on the name of my channel, go to playlists. There's one called taxes. All the tax videos, including this one, will be in that playlist. Thanks for watching, everyone. See you next time.